Thank you.
Grand. Thank you. Welcome. Welcome to the Audit and Governance Committee Transport for the North meeting, scheduled initially for an in-person meeting. We are holding the meeting online as a consultation call. I trust we've covered off all the implications of that in terms of what we can actually approve. There's in terms of the agenda, the meeting is actually scheduled to be in two parts. The second part, the proposal is not to hold that in public. We don't believe there's public interest in doing so. So if everybody's comfortable with that, we shall proceed on that basis. Is that okay? Grand. Thank you. Good. I don't think we need to do introductions. I think most people have met each other before. Are there any declarations of interest, either generally or items on the agenda that would preclude their participation? No? Good. We've got, unusually, we've got minutes of two meetings, one of which I can barely remember because it was in September. I think I think, Helen, the requirement was to approve these in person, but obviously we're going to have to find a sort of workaround to that. The September minutes, I don't think there was a huge amount in September's minutes. Hopefully colleagues have had an opportunity to look through that. It was more of an update on the risk register and aspects of assurance. I don't think there are any particular actions that came out of that, or none that we need to revisit. And the minutes from December, there were a number of actions in here, some of which will be picked up as part of agenda items later on. In the meeting, there was an action in there in respect of reviewing cyber risk on the risk register, and I'll pick that up, or Daniela will pick that up when we go through the risk register. There was an action in December's minutes as well in respect of I think it was an update in terms of auditing accounts, but we circumstances have kind of overwritten that, so there is obviously an update on the requirement to approve accounts at this meeting. I don't think. Oh, and the update to the governance statement, which again we'll cover off later on. So they were, I think, the three substantive actions from December. Is everybody happy with those minutes as an accurate record? Helen, go ahead.
Yeah, Chair, just to note that, yeah, as you've mentioned, because we are online, we can note those minutes, the committee can note those minutes, and then when you're next in person, you can approve them formally there. Just while I'm on, I'll just give you the apologies that you've had today are from Stuart Green and Councillor Joanna Baker-Rogers. That's all I needed to inform you of.
Thank you. Meeting administration is not my strong point. Thank you, Helen. I appreciate that. Good. So I think that takes us down to item 4 on the agenda, which is the final audited statement of accounts. So I don't know whether that's Lisa or Keith to take us through that, please.
Sure, I'll take us through that, Graham, Chair. Thank you very much. I'll take it that everybody's read the accounts and the cover report. We presented a draft. It was published at the end of June last year, and we've now got the final set of accounts. We, in December, described the reasons for the delay, but they are now finalised in January, and the audit was finalised and Mazars are happy with the content of the report of the accounts, report and accounts now, and signed off the audit. So we presented the final accounts for the committee to consider. I've highlighted the key P&L and balance sheet items in the recover report, and just to say finally that before Daniel comes in to describe the figures and the audit outcome, is that the deadline was 27th of February for publishing these accounts, but because of the timing of this audit committee and the board in March, we weren't able to achieve that. The upshot is we're non-compliant and go on a list for a matter of 3 weeks, only 2 or 3 weeks, and then as soon as we have approval by the board, we'll advise MHCLG that has happened, and they'll be able to update their monthly report to say that we are now compliant. So it's only a very short-term non-compliance, and we felt that was the most appropriate action, rather than trying to set up a special audit and governance and board in Feb to enable that. So if there's any questions on that at this stage, I'll hand over to Daniel and he will describe the accounts and the audit.
Thanks, Keith. Apologies, our report didn't end up on the agenda. I think there was a mix-up in who was sending it in, but I've got a version of it. I can share screen if that's okay, Chair, and then send it over after the committee, just in case you've got any further questions. Let me just try and work the technology.
So this covers off the, I think it was version 12 that was on the agenda. Is that right? Okay.
Yeah. Hopefully you can see the report. Excellent, thank you. So yeah, as Keith said, this is our audit completion report. We finalised the last parts of the audit in January and held a closure meeting with Keith and Lisa in early May, so we managed to agree all the adjustments to the accounts in time, although the committee's after the deadline, as Keith mentioned. I think high-level message is that we will be issuing an unqualified opinion on Transport for the North's accounts. So that is that the accounts do show a true and fair view of Transport for the North's financial position. So that's the good opinion that you want. It's the right outcome for the organisation. And just to draw to your attention the key messages, I'll just jump through to the significant risks on the audit that we identified. So there were 3 significant risks we identified. The first one being management override of controls. That is a standard risk under auditing standards. So every audit across the country you will see has this risk in there, and it reflects the fact that management could, if they chose to, manipulate the financial reporting in the accounts. So as you would expect, we have to pay particular attention to this in our work. We mainly do that through looking at accounting estimates and the journal entries that management put through the accounts, which move items from one code to another. We completed that work as planned and there were no findings from that work. So again, a good position for the organisation. And then the second risk is valuation of the pension liability. We did have an adjustment to this, and we've set out in a further section that was around the application of the asset ceiling, and that's because at the fund level, the overall pension fund is in a net asset position, so accounting standards require you to limit the level of the asset that you recognise in your accounts. So a technical adjustment was put through after we received the draft accounts for that. Sorry, I've gone the wrong way. And then the final risk we identified, which we spoke about at the last committee was the implementation of IFRS 16, which is the new accounting standards for leasing, and in effect it brings all leases on balance sheet. Transport for the North only really has one significant lease, which is for the accommodation. That previously went through the income and expenditure account because it was classified as an operating lease. That's no longer applicable under the new standard, so you're required to recognise a lease liability on your balance sheet and a corresponding right of use asset on your balance sheet. There was an initial estimate put through the draft accounts for those. Work was undertaken after we received the draft accounts, and those figures were updated, so we've noted those, but we're happy with the revised figures in relation to the lease. So just moving on down to the changes to the accounts. The impact of the pension asset ceiling was just over £5 million. It increased the reduced the liability, debited the liability by £5 million and credited the pension asset by just over £5 million. And then the other adjustments, which are much smaller in nature, are around the adoption of IFRS 16 and the changes required to bring the accounting treatment in line with the standard. There were some other disclosure misstatements that we identified during the course of the audit. None of those were significant in nature. One of those that hasn't been corrected is when we complete our testing at the pension fund, we always identify timing differences between the time the pension fund prepared their accounts and valuations of those assets at the audit date. So we calculate the share for each body of that extrapolated error, and we report it to you as an unadjusted error. We would never expect management to adjust for that because it is a extrapolated error rather than an actual error, and it's not material to your accounts. So that is listed as a uncorrected misstatement in effect, but that is normal, and that's the approach every other organisation has taken who is part of that pension fund. There are some further adjustments that will be required in terms of IFRS 16 next year. We've set those out at the bottom of the page. They're very technical adjustments. So in terms of the balance between getting the accounts finished and getting them absolutely perfect, we're satisfied these disclosures aren't material around IFRS 16, but they've not been processed through the accounts. They'll be incorporated into next year's disclosures, but again, we're satisfied that's nothing for us to worry about in terms of our opinion. Just jumping down to value for money, we reported the outcome from our value for money work at the last committee meeting, and you remember that we'd identify one significant weakness in TFN's arrangements, and that was in relation to the draft accounts being placed on deposit for public inspection when changes were still required to those. So I won't go into that in detail again. The rest of the report after that section is fairly standard and includes the draft management representation letter and our draft opinion. So as I say, I'll share that with you after the meeting, but there's not really anything non-standard in there other than reference to the significant weakness on value for money in our audit opinion. That sits there as a separate section to the accounts opinion, which is unqualified. So I'll stop sharing at that point, Chair, and happy to take any questions.
Thanks, Daniel. So can I come to Stephen or Richard first? I'm just conscious that the point about being non-compliant from a perspective of timing, I think that's been covered off, and the implications of that seem quite minimal. My word, not yours. But I just specifically wanted to give Stephen or Richard an opportunity to ask any questions about that point, if you have any. Stephen, go ahead.
Thanks. Yes, it's on that one point. And obviously, I noted it's mainly about timing there, but and obviously it did indicate that obviously after a month or something it should revert back to okay. But is there any sort of long-term consequences from being actually on that list? Does it affect anything across us or government sort of funding arrangements or anything else like that? I'm not familiar with actually how all this works in that sense. So any information whether it's got any long-term effects because of it would be helpful to be aware of. Thank you.
Thanks, Stephen. I don't know, Keith or Daniel, I don't know whether maybe Keith, if you want to pick that up.
I do not believe there are any long-term effects. There's no financial penalty. That's certainly my understanding of the situation. But Daniel's more familiar with that than myself. So if I could invite Daniel to comment.
Thanks, Keith. Yeah, absolutely right. There's no long-term implications. I suppose the key thing is you'll want audited accounts as soon as possible. At that point, MHCLG will they'll not necessarily remove you from the list. They'll just say that your accounts are now audited. But I suppose for other authorities that may be doing things like big borrowings, they might need audited accounts to support that when they go to the bank. That's obviously not the case for TFN over the next few months. So that would be the sort of financial implication for some places, that you need a set of audited accounts to provide that assurance to lenders. So no funding implications as far as I'm aware. I mean, obviously Keith has the discussions more closely with departments, but nothing from our point of view other than being on the list.
That's right. And just to confirm, as Daniel says, TFN does not have any borrowing powers. So we don't have any borrowings, and we can't borrow. So you're right. That would be an impact if we were able to do that, but we can't. So there isn't.
Grant, thank you. And although this isn't a defence for context, my understanding is that we're certainly not the only organisation on that list. If that gives people some comfort is the wrong word when you're talking about compliance, but you know what I mean.
That's right, Graham. On the list, I think there were 50 public sector organisations on the list last year, and Daniel may have seen what the list is looking like at the moment, but I don't know whether he has. Do you have a comment on that, Daniel?
Yeah, I've not got the national list because we only reported back to PSA at the end of last week, so we've not seen the outcome from other firms. But we have 4 organisations on the list for varying reasons this year. So yeah, you're not the only one. I appreciate that's not exactly comfort, but it's nice to know you're not in a pie of one.
Always. Grant, thank you. So the ask is that we approve the accounts with a view to them being presented at board on the 16th of March. Is everybody comfortable with that? Are there any other questions? I don't think so. Grant, is there anything else, Daniel, on that section?
I suppose the only other thing to mention is, like last year, we can't sign the audit certificate at this stage because we need to wait for the National Audit Office to tell us they don't want us to do any work around whole of government accounts. That came through in November last year, I think, from early December. So it'll be around that time scale again once they've sort of got to the end of their audit of MHCLG. At that point, we'll issue the audit certificate, which formally closes the audit, but that doesn't stop us issuing the opinion after the board in March.
Okay, that's grand. Splendid. Thank you both. So if we can record that as approved and move on. We're on to item 5 on the agenda, which is annual assurance report, which again is the proposal is that this is submitted to board on the 16th of March. It's effectively a summary of committee activity. It provides some visibility of the kind of things that we look at as part of our agreed scope under the Constitution. It's not a particularly long report, but it does pick out the salient points in terms of visibility we have across internal audit activity, external audit activity, and I think buried within that, for me, and part of my narrative to board, is the relationship that we continue to have with external audit and with internal audit. I think that relationship is strong and vital to the work that we do. It talks about visibility that we have across financial reporting, and again draws out some of the detail in respect to issues that Daniel and Keith have just taken us through. So again, making clear to the board that we have visibility of those issues, I think is really important. And it talks about monitoring of our effectiveness as a committee. So again, the proposal is that if
I think we may have just lost the chair. Okay.
So we've got a number of options here. What we can do is we can probably wait for Graham to come on, or we could appoint another chair in Graham's absence. I think it would only be fair to say I'd wait 5 minutes to see if he can come on again, and then we can make a decision after that. Here he is.
Yeah, are you with us?
Hello. Can you hear me all right?
Yes, you're back.
Excellent. There was no catastrophic event. It just seemed to have been a glitch with the connection. I don't know where you lost me, but I was taking you through the report. Hopefully you heard most, if not all of that. You've had the opportunity to read it, and the proposal is that we approve it, and I will present it to board on the 16th of March. Are we okay with that? Grant.
You've got Richard Thomas with a question.
Sorry, Richard, go ahead. Thank you. Thank you.
Thank you, Chair. I was just gonna, I didn't raise this question before because it was a different year accounts, but I just note that within the section it mentions that for the page 111 for the accounts for 25-26, that there was going to be additional resources to improve the overall process. I was just asking what those additional resources were. I get, in my opinion, the over complex landscape of public accounts. They overcomplicate matters, in my opinion. But so we don't come across a similar situation next year with regard to sign off the accounts. I was just the question is, what are those additional resources? Thank you.
Yeah, no, it's a great question, and I think, Keith, a perfect segue into section 7 on the agenda. I think that's covered as part of that.
It certainly is, but it looks like Lisa's ready to respond to that particular question, so I'll let her, as she's got a hand up.
Thanks, Keith. Yeah, we've just procured external services to do the production of the accounts in recognition that it's, you know, it doesn't, we don't require a separate resource just to do the technical and work required at the end of each year. So it seems sensible to commission that work externally to complete the final sign off.
That's right. Greg, did you want me to go into 7 here?
Well,
item 7.
I'm just conscious that given item 6 requires our approval. I just wanted to double check that we're happy to continue beyond 6. I think we are. I think everything's happy. But yeah, Richard, I think the way that the way that reference was originally captured. Again, events may have moved on a little in terms of the how. Keith and Lisa, I think, can take us through that as part of item number 7. Good. Right. On that note, then, straight back to you, Keith.
For item 7. Great.
Yes, correct.
Sure. So yes, looking at the 25-26 annual accounts and audit, thought it was worthwhile giving that forward view on where we are, given what happened last year, and as Lisa has said, we recognise the shortfalls that we encountered last year in resources, and we've commissioned external provider to draft up the stat accounts. It's a once a year activity with specialist technical skills required, and as Lisa said, it's not as we're a very slim organisation and we're getting slimmer, we've had to compromise on what skills we have in house, and just buy them in for the end of the year. So that's what we're doing for the 25-26 annual accounts. As last year, the deadline is the end of June to publish the draft accounts, unaudited accounts. So our external provider will draft those. Well, we'll provide all the detailed figures and calculations through April and May. They will put the draft accounts together by early June. Once we're happy with those, we will agree them internally, and then once the board has approved the future funding and operating model on the 29th of June, on the 30th of June, we therefore plan to publish those draft accounts on a going concern basis, knowing that we have that full funding confirmation the day before. So all a bit tight, but it's all doable, and that's the plan at the moment. We've put together that high-level plan for you in 5.5 that describes that process. So we feel we're well planned and well resourced now to do that really well and in good time. It's just the end of June is a bit tight to get all of the approvals. As a worst case, I guess it's worth highlighting that if for whatever reason there's a delay in approving the funding model on the 29th, I guess we've got two options. We'd have to redo the accounts, draft accounts, and present them on the 30th, publish them on 3rd of June on a non-going concern basis, but that's quite a lot of additional work and recalculations as to what the impact would be effectively on a non-going concern, a closed down basis. Alternatively, we would not publish the accounts and take a rap on the knuckles for being non-compliant at the 30th of June, and hopefully within a month after that we would have confirmation of ongoing funding for 27-28, and we'd be able to then publish the accounts on a going concern basis. That second option is probably preferable, but that's the backstop. We hope we don't have to do that, but we have thought about that and recognise maybe that is the best thing to do, for the sake of hopefully would only be a few weeks, and then we could confirm that at that stage. So yes, hopefully the committee consider that a good plan, and take your questions.
Thanks, Keith. We are going to go back to the governance statement. Obviously, I just thought it made sense to segue straight into that because it picked up on Richard's point. Martin, did you want to come in?
Thank you, Chair. It's just an appropriate point just to raise with the committee to say we are mindful that currently your next meeting is scheduled for, I think it's the 17th of July. So if the committee is comfortable with it, we would propose to work with you on identifying an earlier date for the next meeting of this committee, so that the Audit and Governance Committee meets ahead of the June TFN board. We think that's the right order for it to happen. So if colleagues are comfortable, we will work with you as the committee chair to identify a suitable date to bring that meeting forward, Chair.
Yeah, perfect. Thank you, Martin. So yeah, we're obviously not here to try and predict the future, but I think to Richard's point, there is a plan in respect of mitigating some of the issues from previous year, and hopefully some flexibility in our approach, such that we can adapt and meet whatever deadline we need to meet in whatever sequence. So, good. Anything else to add on 7, Keith or Lisa?
That's everything for me. Thanks, Chair.
Grand. Bless you.
Nothing else from me.
Thanks, Lisa. So just let's reverse just for a second and go back to item 6, Joanne, which is the annual governance statement, which I think is the track changed version from previous, is it not? Yeah.
Thank you, Chair. It is. So the report coming to members today is for the committee to consider and endorse the revised draft annual governance statement. And what we're asking the committee to do is to consider and endorse it. So what's happened is, since we were last here in December, is changes have been made following the committee's comments, and these are shown in track changes. We've also added an executive summary, and we've also included references to updates to the Constitution. The latter of these were agreed at the General Purposes Committee on the 4th of February 2026. In terms of the executive summary, I'd like to just say that Transport for the North considers that its governance arrangements are fit for purpose and proportionate for the size of the organisation, including for the 2025-2026 financial year. During 25-26, the TFN board have agreed to reset TFN's business to take account changes into the external environment in which it operates, including the devolution of powers and responsibilities of elected mayors, as well as changes to its current funding model. Key governance work in 25-26 has included constitutional amendments and simplified ways of working to improve efficiency and reduce costs. And TFN has also published and created new guidance and templates for boards and committees, and also updated its procurement policy to align with the new procurement legislation. Thank you. Have you got any comments, please, or queries? Okay, if nobody's got
I think the chair's on mute. I'm not sure if you're trying to say anything, Chair.
I did, bless you. I was just looking to Richard and Steve to see if there was any questions. Go on, Richard, go ahead.
Yeah, thank you, Chair. It wasn't on a question on the exec summary. I'm overall, happy with the annual governance statement. It reads very well. It was just, and I'm swapping between screens here, I think it was page 120, just to be aware of the charging for services policy and the potential that this might need some sort of oversight by audit. I don't know what the levels of charging are going to be, but it sort of rings alarm bells for me when you're starting to charge for the services and make sure that those charges are correct and that debts are recovered, etc. So I just wondered whether that was something that was going to be considered for future years.
Did you want to take me this? Did you want me to take this, Joanne?
I'm happy for you to take it, Keith, and then I can add anything else on this.
Brilliant, thanks. Thanks, Richard. At this, we are being approached on a couple of what we call TFN Gold offer requests for very specific, bespoke, tailored work. That's not generic. It is very tailored for individual authorities, and you know, we are, as it's a gold offer, you know, we would expect to charge specifically for that, and the customers tend to be prepared to do that, although we haven't really done many. But we're getting approached more and more in recent months for that kind of work, technical work, and involves TAME, but it might involve our IT department. But you know, there's some IT technical requests for accessing space, digital space, as well as tools, digital tools. So it's becoming more prevalent, but we haven't committed to any as yet. We're looking at the process of doing that, and as you say, ensuring that we don't make a profit as a public sector organisation, so we can only charge our costs. But as ever, for the full cost of delivery of any kind of activity can be quite extensive. You know, we and I've made the point, having had experience in other public sector organisations where we can and should ensure that we recover full cost. So there would be an overhead slice, there could be a management slice, project management slice, legal and finance, IT, etc. You know, contract management. So we've developed a template as to ensuring that we get all the right costs, but also that, you know, cost equals charge. There's no profit element included. So we're looking at that at the moment, but it's likely to come to fruition potentially on one or two of them in the next month. What the total value might be in a 12-month period, difficult to tell. We don't think it will be millions. We don't think it will be hundreds of thousands, but it could be up to 100,000. It may be more. Difficult to tell as we go through this reset process as to what our authorities, you know, might require from us and be prepared to pay. There's one angle there, you know, if we are charging for extra services, we've got to be careful about VAT. We're not registered for VAT. We can't claim any VAT back. But if we get over a threshold of 90,000, potentially we might have to register for VAT anyway. So we've commissioned advice on that, which we're about to get over the next month. So we will be well prepared on the VAT side as well. Yeah, that's where we are.
Grand, thanks, Keith. Okay, good. A couple of things that struck me, which it's worth just flagging. I guess I noticed the focus on proportionality, which has always been front of mind, I think, and more so now than ever before. So I think the report Joanne provides visibility to that and underscores its importance, which I think it's important that the committee recognises. I think the other point, and we can touch on this later when we speak about risk, is that evolving governance creates loopholes. That's what it does. And as we change structures, as we change arrangements, some things get lost, people leave, things get forgotten about. So I think it is important to recognise that when we're talking about change, we're changing the way that we should consider risk. And I think the final point is that I'm guessing, because the draft identifies a number of things that have not yet been approved by board, we are approving this statement on the understanding that there are things that have yet to be presented. Is that correct?
Yes, it is. It is, Chair. Yes.
Yeah. So it's a provisional in terms of the minutes. This is a provisional approval, I guess. If there are any changes to what we've seen today, I guess we just need to find a mechanism of playing those back to members for full visibility. Okay. Are we happy to give our approval to that on that basis? I think so. Good. Thanks, Joanne.
Thank you, Chair.
So, Alex, I believe we are on to internal audit, which includes the payroll review and also forward plan, I believe. Over to you.
Thank you, Chair. So the first paper you have is our progress report. This sets out where we are in terms of delivering the current audit plan. We have one report as planned finalised for this committee, and we have one further report which is in draft, which is our contract management, and that will come to the July meeting along with our annual summary to conclude the work for the current year. Nothing else I wanted to raise in the progress report, really just to highlight where we are in terms of the plan, comfortable in terms of completion for this current year, but happy to take any questions or comments.
Yeah, you're on mute again if you are speaking.
There must be an easier way than having a button with a microphone on it, surely. Anyway, any questions about that, Stephen or Richard? Just something, Alex, that we were talking about prior to this call, actually, and again, it goes back to the point about proportionality. I think the committee would welcome at any point anything that you saw in the audit, in the proposed audit plan, that just didn't feel right from a size, scale, complexity point of view. So I would just encourage you to flag that, feel that you can flag that. I think committee members would welcome that insight, because it's not always easy for us to get a sense of what's proportionate. So yeah, please take that as an open invite.
Thank you, Chair. Yeah, more than happy to consider that question as we move forward from that side. So yeah. Okay.
Grant. Okay.
Okay, moving on to the final report. So we have our payroll report, and this is a cyclical one that we do, taking into consideration obviously pay costs, looking at the arrangements for starters, leaves and changes. We've undertaken data analytics. What you'll see is around leavers, and there's a number of other areas that we've used data analytics to really just test and challenge the data that's in the system, making sure that we've got the accurate pay and reports in place. We've provided substantial assurance. The data analytics didn't identify any particular exceptions based on the testing that was undertaken. There was no duplicates, for example, and we've included 2 low actions, and predominantly those 2 actions are around just the first one, payroll process schedule, just enhancing that around who's responsible for those particular tasks, just to get to demonstrate the segregation of duties. As I said, just refining the documents. And the second one is around, again, just refining the notification form. The process is slightly different in terms of the approval process. We've tested that. It's just around making sure that form reflects the process and streamlines it to make it more efficient as we move forward. Both have been agreed 31st of March, so I don't envisage any issues in terms of completion. We've had good engagement throughout the process for this particular report. But I'll pause. I'm happy to take any comments that anyone may have. Thank you.
Richard, go ahead.
Yeah, thank you, Chair. Very pleasing payroll report. I mean, you would expect not to see much in, I think it's 115 full-time equivalents for the organisation, so it's a fairly small scale. The one thing that I picked up on, and it may be something and nothing, but the part of the payroll is outsourced to Horson's chartered accountants, which was surprising to me. And the report does go into detail as to what their part of the process is in terms of producing pay slips. I think their contract was agreed in October 2018. It just rang a few alarm bells. If a contract in that long ago, when is that contract due for renewal? And does Transport for the North, consider that their involvement is still necessary, given most people do all this in-house, I suppose? So that was just the question around that contract date and whether that contract had been reviewed.
I'd need to double check the contract end date, but it's certainly, I know we'll look at the documentation has been raised to extend them for another year. So it's certainly a service that's still needed. We produce all the requirements in-house, and then we send those off to Horsons, who produce all the required numbers, putting it through their effectively their sausage machine to calculate the appropriate tax and NI implications, and that's just not something we're able to do in-house. So this is why we've always needed that external support to do that, and then we review their outputs and confirm that it's what we're expecting to see based on the requirements that we've sent through. But I will need to double check on the contract sign.
Could I just add to that, Chair? Just to say that Richard, because we've only got 115 staff, it wouldn't be cost effective really to run our own payroll system internally in terms of the system and the resource and maintaining it, and that's why we've outsourced just the payroll processing part of the process externally. We maintain calculations of what annual salary and what people are due, and then they process it to generate the mechanics of the pay slip and payroll, and that's common in small public sector and private sector organisations. I work with a number of local enterprise partnerships which don't exist anymore, but there were 38 of them, and I dealt with quite a few, and pretty well all of them, I would say, either used an external payroll bureau for that part of the process, or they used another public sector organisation, their local authority, accountable body, for example, to run their payroll. So I can't remember one that actually ran their own payroll internally. And I think TFN's no different. It can't kind of justify having that system and specialised people to run it internally, and it's quite a low cost part of the system to do that, and that's why we do it.
Grand. Stephen, go ahead.
Update, yes, thanks. Just to follow on from that as well. I mean, obviously it is quite small, and obviously I think it's obviously clearly not going to be viable or sustainable to actually do it in-house yourself, and I take that point very much so. The only query, obviously, presumably it is occasion has to put out to tender and so forth, that sort of work. Is there any scope in future for maybe like joining up with another local authority? I know us locally in some of the GM, but we've got our own where a number of local authorities fit together, so we're all similar nature in the public sector. So it would seem potential is there for you maybe to look at when this comes up next time, to actually explore that possibility of working with some others, because a lot of things will be very similar for you, and it will certainly maybe help with reducing costs as well, potentially. Thank you.
Thanks, Tim. Yeah, I think the pooling of services, pooling of contracts is I have no idea how appropriate that is, but I would imagine colleagues have considered that. But yeah, good prompt. Okay, thank you. So if there's nothing else on internal audit, I think we've got contract management. The draft report has been issued for that, and so we should see that at the next meeting. Is my my assumption. Grand. Okay, thanks, Alex. I think that's as done on internal audit.
Chair, we do have the audit planned for 26-27. Apologies.
Sorry, go ahead.
No problem. Thank you. So the final paper from me is the audit plan, and we include a strategy, a forward-looking plan, but also reflecting back so you can see what assurances you've received previously. We've had good engagement in terms of prioritizing the areas for coverage, and what you have in the paper is two set areas for consideration in the forthcoming year. One is accounts payable, and the second takes into consideration the audit that was deferred in 25-26, which is around IT security, recognising obviously this continues to be a risk for every organisation. Within the plan, you also have follow-up, recognising again that during the year at committee, obviously committee keen to see the actions that are that were agreed in 25-26 and any that are outstanding to be followed up to confirm that they've been implemented. So again, to give committee assurance that those actions have been embedded. So for this committee, we're asking for approval of the audit plan. As I said, set out the strategy which takes you into 27-28. You'll see some areas, but as you know, as a committee, we continue to revisit those potential areas based on your assurance needs as we move forward. And there's flexibility, obviously, in year if things change and further assurances are needed. But I'll pause at that stage. Thank you.
Yeah, sorry, Alex, my fault. We'd been talking about this on the call immediately prior to the meeting, so in my head I'd already covered it off. I do apologise. And yeah, and again, just that sort of replay the point about proportionality. You know, accounts payable and IT are things that you would perhaps expect to see on the assurance plan, but just to look at the assurance requirements through a change lens would be an obvious step, I guess, at each meeting. It's not just something for the year, but as you say, it's an evolving plan. So Richard and Stephen, do you have any comments about the forward plan?
No, I don't, Chair. I've looked for it a couple of times, and it's all in the green and amber, so I think that's quite clear to me. I think it's quite positive. I've looked through some of the detail and have no concerns at this point on that at all. Thank you. It looks fairly straightforward.
Same, Chair. Obviously, just noting that the IT audit is going to cost 2.5 times more than a normal audit, but that's positive for me, because if you need to get technical experts in once in a while, and if Alex and her technical team are doing that review, then that's probably the reason why you're going to reduce from the normal 4 audits a year down to 2, but I'm confident, you know, given the fact that it's a flexible plan, that we can move things. If anything does crop up, we can request that other things are audited as we go through the year. So that's positive. So no further questions from me. Thank you, Chair.
Grand, thank you. So I'm not going to tell you that you finished this time, Alex. You can tell me if you finished, because I got it so wrong last time.
Thank you, Chair. Yeah, that's all the papers from me. Thank you.
Bless you. Bless you. Thank you. Good. Right. I think we are now. This is probably the first time in a couple of years that risk has been at the end of the agenda. I don't quite know how that's happened, Danielle, but it's maybe we should revert back to having it at the top next time, maybe. So over to you.
Thanks, Chair. Yep, I agree. We should have it at the beginning as well. Okay, so you'll notice from reading the public register that we've had a comprehensive review based on sort of changes within our external and the internal environment. We've closed a number of risks, and we're in development stage at the moment, really, of identifying two new risks, and I think and that's around our sort of future operating model and funding model. And at this stage, we're working with senior leaders and constituent authorities to consider sort of transition arrangements and future options for how sort of TFN operates and how it could be funded. So that's the work we're doing here at the moment. However, these risks are really in development, and is a further exercise to how we assess these risks in terms of their sort of impacts and probability, but also how we look at sort of further mitigation actions around them as well, which we will be sort of working on over the coming weeks, really. I think in terms of, obviously we have closed a number of risks, and it's how, I guess the next stage for us is, as well as looking at these two newly identified risks, it's how we look at the register as a whole. How do we ensure it aligns with the business plan for the 26, 27 and the deliverables that are in that. But as well as that, it's how, for example, now we have the announcement with FDR, how do we gain further clarity and consider risks within that area? But as well as that, how do we look at the process going forward in terms of other risks that maybe need to be captured, really? And there's some of the sort of main sort of changes on the register this time round. It's probably worth me noting as well cyber. So I know Graham picked up on that from the minutes before. So we had a review of cyber with the head of IT in terms of that risk that we've got currently. You'll notice that we've included two existing controls that were already captured at functional level around data storage access. But we've also had a thorough review of the assessment of the risk. So, and from speaking to the head of IT as well, he did mention that at the training session as part of the last A&G meeting, he hoped to provide some assurance there around some of the existing controls that we have in place with cyber, but also to mention that we're comfortable at this moment in time with the assessment of the risks. However, we've just gone through sort of penetration testing at the moment, and we have got an internal audit schedule sort of the 2026. So we're hoping that through those two sort of processes as well, we can provide further assurance of the assessment, and if we do need to reconsider it at a point, we will. So that's on cyber, and I think probably worth mentioning as well that the plan for the next committee meeting really is probably a deep dive into those two new risks that we're currently developing at the moment, really. I think that's it from me. Any got any questions on that? Thank you.
Thanks, Daniela. Stephen, you've got a hand up.
Just on that point, Chair, please, generally, I mean, obviously, it's it's an area obviously we need to get on top of fairly quickly. Obviously, looking at the budget and so forth, and actually put something that's in place that actually works under the new models. So, how soon do we think that will be taking place? Will we get any timeline for that sort of work that we can advise us about? So, I would see it as something that's probably fairly urgent, I would imagine.
What's that, Steve? In terms of taking place, in terms of which exercise? The two identified risk models that you've had, the 2 points of new risk that you've identified there. The deep dive itself.
Sorry.
The deep dive into those, do you mean in terms of? Yes. So we're hoping to do
and
that.
The process for that, yeah.
Yeah. So currently, we're the next phase for us is we're going to go to board in March, and then we're hoping to sort of within the next few weeks sort of further develop that risk and assess it, and further mitigations around it. We'll probably do a deep dive into that into the June meeting that we have for A&G.
All right, thank you. That's helpful because obviously I do think it's something that needs to be done fairly quickly, and
Definitely.
rather than get caught up in the bureaucracy of organisations, it can sometimes take time. But yeah, that's helpful. Thank you.
Thanks, Stephen. Richard, did you have any questions?
Yeah, thank you, Chair. Thanks, Daniela, for another excellent risk report. I enjoyed reading it. Do similar reports myself, so I know it's difficult to put all the elements together. It's just an open question, really, an observation, just on CR4, which is the recruit and retain staff. I know probably back before Christmas that the thought was you would potentially lose staff due to funding worries, maybe, and that's probably the best way I could put it. But it's rated probably your second highest now. So it was just an observation to say that just looking at it, it may look a bit high, and whether the likelihood has lessened now that you're back on track. I mean, I looked at in a later report, you've got a KPI around recruitment and retention, which is around, I mean, your sickness levels are excellent. The recruitment and retention, which for me, I think would be the ins and outs of staff throughout the year, is 6.9%. So that looks fairly good. So I just wonder whether that risk is may be slightly overstated, but that's not for me to say. It's just an observation. But no, thank you for your report.
Thanks, Richard. I think obviously when we're looking into this risk, we look at a number of things and the impact that we have. And I think, when we look at the funding element as well, it's the new risks as well that are linked into that particular risk and how that may have an impact on us, which is probably why you still see it as a high at the moment when we really look at the assessment of it. It may change next time, it may not. What we'll do is we'll look at those impacts combined together and make a sort of decision on it. But for now, yeah, I think as well, it's part of that risk as well is associated with what Graham was saying before around, the knowledge element of how, we transition and we ensure that, the levers processes and the controls around that are effective, that we have in place in terms of that transition arrangements. Thank you.
Thanks, Richard. Daniel.
Thanks, Chair. Just a comment from me, really. I think given the change the organisation's going through at the moment, it's important for this committee to think about the arrangements in place around that triangulation between the risks that are being reported, the organisation's risk appetite for those risks, and then how does that feed into linking back to the previous report, the discussions around what internal audit may or may not need to look at going forward, and sort of bringing all those three together, because the reports don't sit in isolation. The audit plan is inherently linked to the organisation's risks.
Thanks, Daniel. Yeah, valid. Sort of the next sort of agenda for the reviewing the risks is in line with how we review it, in line with ensuring it's in line with the business plan, the audit, that we're going to sort of set going forward as well, not just for this year that we're going into. So yeah, thank you.
Yeah, thanks, Daniel. And it sort of plays to the comment, Danielle, you made earlier about the business plan. Obviously, risks only have meaning in relation to what the organisation is trying to do. So changes to the business plan inevitably change not just the risk, but your appetite for that risk. Yeah, I as I've said before, I've got chronic unease, and cyber is one of the topics that I've got chronic unease about, and I know that we've had discussions about this before. I know that you've gone to some lengths to provide the committee with assurance. I think as long as you call it out as yellow, I will always feel uneasy about that assessment. I think there is a disconnect between what we see happening in the real world and how we think about some of those threats, be it cyber or be it anything else. So really interested to see whether that assessment changes following how you digest the results of the penetration test and the audit, etc. The other comment that I think it might be worth just having a brief discussion on for colleagues is the narrative within the report uses two lenses in terms of strategic risk. One is the lens of TFN's objectives and whether those objectives are met, and the other is the lens around expectations of constituent authorities. I think the lens that might be less apparent is the need to deliver on statutory obligations, because if we don't, if the organisation doesn't, it's potentially in an unlawful position. So I just I know Keith had some comments about this prior. I think Martin did as well. But just to talk about briefly, if we can, at committee now, where we think we are in respect of ensuring that those statutory obligations will still be met during a period of increased uncertainty and change, I guess. Martin.
Chair, if they are very good points. If I might suggest, I think it might be easier for us to take that as part of the conversation under part 2, because I think there's a number of you're rightly picking up that there are a number of interconnectivities here, and I think it'll be easiest for us to pick that up in the part 2 conversation around the budget and the business plans.
Perfect. A good direction to point us in, Martin. Thank you. I appreciate that. Good. Let me hurry back to the agenda. I think in terms of part 1, I think that's pretty much it. Martin made reference to the fact earlier that we will be looking actively to move the meeting that's currently scheduled for July into June. Something we may have missed, Joanne, can we just touch upon briefly the cadence of committee meetings going forward, and the proposal that's going to board? Is that now for 3 meetings a year?
Hi, Chair. Yes, it is. So for the municipal year 26-27, we're intending to have 2 meetings in person and 1 consultation call meeting. And
the driver being proportionality, I guess, again, primarily.
Yes, Chair. And after speaking to you, we agreed on having 3 meetings. Taking into account proportionality and what you talked about in terms of risk and the work which the Audit and Governance Committee does for the organisation.
Yeah. Yes. Just for colleagues' benefit, I'm just keen to maintain a level of frequency that provides visibility across that change landscape, because as I said, it is important that we do that. So hopefully that's agreeable to move from the current frequency of 4 to 3. Martin.
And Chair, just the other thing to note in terms of what's before the main board on the 16th of March in terms of governance, if you like, is to say that there is a recommendation from the General Purposes Committee going to the board on the 16th recommending that each constituent authority is asked to nominate a member to attend and sit on the Audit and Governance Committee. We've had the conversation, Chair, about the importance of having visibility and involvement from all constituent authorities, and that's been followed through now, as I say, with a recommendation from the General Purposes Committee to the board on the 16th of March.
Grand, thank you. Good. Okay, so I think in terms of part one, I think that's us done. So I think we can exclude members of the public at this point in terms of recording. Is that something we can confirm?
Thank you, Chair. I'll just stop the recording here.
Thanks, Helen.
Stop.